almost smooth retail trading team. I just turned that light on after it's been glaring in my face all day. But nevertheless, cheers to you and cheers to another lovely trading day. This is Mastro coming to you live from Puppet Show Central with your routine debrief. So I'm going to do a debrief for today. We're going to see how it goes. I'm also going to release a newsletter in the evening here. I'm trying to up my engagement. We have stagnated a little bit here, so there's a couple new things coming. First being, I'm going to try, like I said, this evening thing. Depending on the feedback I get, I may move it back to that briefing thing where I do not get to have a lovely cocktail and I have to go back to that whole water or coffee thing. But regardless, we're gonna try this today, see how it goes, and let me know what you think. So I'm gonna take a little sippy sip here. And we're going to jump right into our slides. So, debt ceiling thing is ostensibly complete. I know there is some politicking going on as we speak, so it's not quite through. Regardless, my peers and I, we millennials and others in the younger generation are very excited about this increased debt for the effect that's going to have on our future. So we'll see if the market feels the same way based upon today's action. It's not really sure how it feels, so we're going to kind of look at what the price action is telling us going forward and not look at any other memes, at least for today's briefing. So we're going to move right forward here. Make sure all my slides and stuff are working. Very nice. Cool. So we're going to begin today's video by reviewing the routine warm-up. You can find this document in the description, and I keep it updated all day. So the only difference really, well, not the only difference, but something that you're not going to see in these briefings are that look at internals. So what I'm going to do, I'm going to do a LinkedIn post around that. And as you can, I don't know as you can, but if you do recall from last week, I discussed that cool little volume profile cheat sheet that I said I was going to do in a LinkedIn post. You know, I figured that it's so important that we should probably be looking at it pretty much every day. So I went ahead and put that right in the warm-up document. I moved some stuff around to kind of make the information more streamlined. One of the major changes being that focus on SPY level. So this is the new document. You can access it by going to the description of this video. I think it's going to be a lot more helpful this way, and I do keep this updated throughout the day. So regardless if we're doing a briefing or debrief, this document gets updated by 10:30 Eastern and stays updated throughout the day as other levels become relevant. So the first thing that I'm just going to point out here in this document is that you saw today a rare successful open test drive. So if you have been watching these briefings, or this is now a debrief, but if you've been watching my channel, you have heard me say a lot that the bulls have successfully unwound a lot of those open drives and open test drives that we've seen in May. Well, this one held, and you saw that consistent downward momentum until the afternoon squeeze, ironically enough, right on schedule. So there's a little thing called the 2-bot. At about 1400 Eastern, the market opens up really into a new market, and at 1408, interestingly enough, seems to be when they choose the direction they want to go. And today, if you look at the low, what time was it? 1408. That has happened quite a bit recently. It's pretty uncanny. And so yeah, before that, we did have that open test drive, and that did work. That TPO, you had that nice wide IBR suggested rotation, and as we saw, as we ended today, you did have that rotational TPO. So it really was a pretty clear day, despite what I think was fairly complex trading. And we go to the trade log, you'll see what I mean by complex. Yeah, at the end of it, what happened? We closed at 0.00% in the SPX on the day, completely and utterly unchanged, which you don't really see too often. You'll see a 0.01 or 0.02 or something like that on the close, but we have a 0.00% on the close today. So really, we went nowhere, and that just makes a lot of sense as the powers that be try to sort out what this debt ceiling deal means. And obviously, we didn't close outside the expected move because we don't really know where we're going. And there's a really interesting note, I think, and I'm going to leave the slide up here for a couple seconds, from this morning's Tier 1 Alpha newsletter. So instead of giving you the macro spiel, I'm going to just recommend you go check out that newsletter if you want that. And I'm going to include what I think are the most important aspects of each one of those newsletters. So today, It's what's going on in the NVIDIA, I believe is the proper pronunciation, squeeze that's going on right here. So the TLDR, if you will, is simply the big boys are unloading their positions and selling it to retail. So super interesting what's going on there. We'll see what happens. I do not have a position currently in NVIDIA, pardon me. So I do not have a horse in the race, as they say. Yet I think it's pretty notable what we're seeing going on relative to that price action, and also relative to what's going on in that Vanguard Total Market Index as well. So is this a glaring sell signal? Not necessarily, yet it is again showing us, along with the breadth that we often talk about, that all is not necessarily well under the surface. So I'm going to share this slide, by the way, on Twitter. I will share each batch of slides as I do it for these briefings or debriefs, whatever we're doing here, and you can revisit that if you're interested in exploring more. So moving on from there, what did we have today? Again, this newsletter is from that Tier 1 Alpha newsletter. You can see right there, tier1alpha.com. These come out in the morning, so I'm just going to kind of bring them to your attention if they're relevant in these debriefs or briefings, whatever. But if you want to see them yourself, get them before the market opens, just go to that website and you can get the newsletter. I'm not affiliated yet. If I'm going to use their material, I figure it's only fair to give them that little plug. So long story short here, we're back to that neutral gamma. What does that mean? That the dealers who control the market most of the time had no reason to move us one way or another. And what happened? We had that 0.00% close. So these gamma exposure levels are really, really important in this 2023 market. I have resisted them for a long time, yet if you just kind of start to follow what's going on there, it is becoming quite interesting how reliable they are. So I just wanted to bring that up. You saw that 0.00% close, and we are still going to be in that neutral gamma environment going into tomorrow unless we get some type of significant move overnight. So let's move on to the actual price action side of things. We'll take one more sippy sip. Starting with our weekly chart. So a lot going on here. I just want to kind of start with the major support resistance on this weekly chart. The major support being 410 and that major resistance being the high here at 423. So these levels are SPY, but we have a large focus on SPY for the levels, partially because how responsive price action is even in the ES to these SPY levels, but really just kind of keep it consistent so that we can not get too confused between the SPX, ES, and SPY levels. I'm just going to keep it at SPY, standardize that, as the ETF is really, I think, the most significant. It's the highest liquidity instrument, and I think that's what everybody's really looking at in terms of the major players. So besides those major support and resistance, I think it's notable that we did fill that gap from Friday close today. Obviously, we had that nice little pullback, so that gap is off the chart. We're going to talk about that other gap on the daily chart. So really what I just want to bring your attention to first is the fact that at that gap level, we have a confluence of a 3-week high, 2-week high rather, and you also had the swing high that you'll also see on the daily chart right around there. So that's at that 421 level. That 421 level is going to stay on our chart. It's going to be super important as time goes on here because there is just so much going on there. So not only that, you had that outside week up the week prior, which was last week. And what an outside week up is it means that we test lower, yeah, we end up closing higher, and that creates kind of a significant demand zone, as you can see with those pair of outside weeks. Let's see, 3 and 4 weeks ago, and you saw that throughout. You saw that huge consolidation, that large demand zone form, and price was just buoyed by all that demand that built from those outside weeks. So this is a very important price action indicator, and that's why I have that green rectangle right around the low from today, as well as encompassing some of that area from last week and the week prior. And what also is hanging out there, well, you have that 100 weekly SMA, very, very important level. Once again, right around that 420 to 421 area is going to be that significant demand. If bears get through that, then we may be cooking in some sort of a pullback, but there's a lot to get through. I'm not really playing the bear case outside of intraday. I'm not really entertaining it quite yet. We need to start breaking some levels, and we're going to talk about that in just a sec. So just to kind of give the bear case as we're looking at this weekly chart, if you look at the outside week candle, that's what's called an umbrella candle, and all that means is that the trend is weakening. So in this case, the uptrend is weakening. So that is the one bear case I have on this particular chart. So if we go a little more granular, look at the daily chart here, and you look at that support and resistance, it's going to narrow a little bit. Still going to be that 423 number, and it's going to go up to that 412.50. So if you remember on the last chart, 410 was support, and so on this chart it's kind of around that 412.50. Again, there's a lot of space to pull back and still remain bullish. I just want to kind of highlight that as we move forward in the briefing here. We did have that nice gap close today, yet we still have that one more gap there at about 425.50. I think that's really going to be a magnet as long as we remain in this uptrend. And once we get through that gap, there are no more gaps, at least to the upside in the chart. All those gaps are now lower. So looking to see if we can get a move to that 425.50, obviously looking what happens there. Yet I still think that that remains a magnet going forward. And why does that remain a magnet? Well, if you look at this chart, you can tell by those trend lines. We are in, I'm going to go back to the weekly chart here. So you can see that trend line, the difference between the trend lines. So that solid trend line is the trend line from the October 13th low. And that dashed one is just kind of the local trend line going from that swing low on the weekly a few months back there. So we are in an upward channel, and until that upward channel breaks, one has to assume the bulls are in control, and especially as long as we're above that 412.50 area, 410 to 412.50, we'll say the bulls are in control. So I will play pullbacks intraday just because that is the day trading system, yet do not be fooled by even a fairly steep pullback. The bulls remain in control, in my opinion, until we break that trend line, and at least until we break definitely that 410 area on the weekly chart. So that's the big picture. Not too complicated. We got our nice levels, and if you go to that warm-up document, I keep those updated every day, so you don't have to get confused by all the various things going on. Those are going to be the levels, and I do keep those updated intraday. So if we want to get a little more granular, that's going to be this TPO chart. So if you're seeing the progression here, we go from weekly to daily to 30-minute TPO. Let's go on that 30-minute TPO. The bears did put in a nice little supply zone at that island value area above there from about 42.30 to the high. The bears do have a nice little supply zone there. That's not saying that we're having a reversal here. Yet as price goes and explores that area again, it's not just going to be it's unlikely, I should say, to be another one of those breakout looks. And so just kind of mind that value, the island value area from about 42.30 to 42.40. And you can't see it on this chart, but there's a little yellow horizontal representing a single that the bulls did clean up there. So 42.30 to about 42.40 is kind of the last major supply zone before I think we resume that breakout and start looking toward that higher SPY gap at 425.50. So how steep can we go for a pullback? I think 41.90 is pretty easy. That's kind of this is what I'm looking at for tomorrow. We can go obviously much lower again. It's 410 to 412.50 is that zone that I'm looking at least for that swing look sentiment chart, we'll say. Yet I think a good target for a steeper pullback, if we do want to take out today's lows, is going to be about 41.90, and then we can reassess there. So again, this is just looking forward to tomorrow. As the day progresses, if we do have moves intraday, all the significant levels are going to be reflected on that warm-up document that you can find in the description of this video. So one more price action chart here is what's going on in volatility. We are navigating a descending triangle on the volatility chart. So the bears tried to make a nice little move today, yet what happened? They just got rejected at the top side of that descending triangle. And that is a bearish pattern. What normally happens, you can see where the volatility was when I took this picture. I think it closed a little bit higher because I think right at the end there we had a bit of a shoot up. Yet really it's around that lower edge of the triangle, and it is positioned rather to go a little lower, in my opinion, until we at least break above that trend line. And I have a little line there where I think that's going to be somewhere around that 1930 to 1940 zone. So again, intraday, we can take bearish plays, I think, and depending on your system, I do have my updated system in pretty good detail. If you go to the resource section, so again, description of this video, there's a folder. You go to that routine day trading document, you can see, I know I call it sit, stay and trade. I'm just playing around with that. That's going to kind of merge into Fabio. But what I did there is I put some good detail of how I'm actually playing that system. So you'll see today, as we go on to the next slide, was short most of the day. In fact, the long side of things was where I got taxed a little bit on my profits. Yet that, yeah, I kind of lost my train of thought. Point being, we're talking big picture here. We go to that document if you want to see what's going on intraday and how I'm playing that intraday. So let's see what happened today. In this account, at least, in one account, I actually lost money because I tried to buy the dip. But in the mechanical account, we had a pretty darn good day. I think total profits were somewhere around 2,400. I'd have to do the math, 2,000 to 2,400, somewhere around there. And you can see just how complicated it was. So at the very beginning of this briefing that it was a complicated trading day, and you can see that we got a lot of different entries. I actually got 5 entries, which is the max that I have so far in my back testing. So really random day to get that many contracts on at once, but on those short contracts, I did have 5 on at once before we finally got flipped around. So I just want to kind of review that. That's what's going on there. And you can see the system I used by going to that routine day trading document and looking at SIT. So that's it. Nice and short and sweet. I think these slideshows are going to keep things as brief and efficient as possible, hopefully giving you more value than in the past. Once again, I'm trying the debrief thing. I'm going to send out the newsletter right after this. I'm going to kind of gauge the engagement, see what feedback I get, if I get any feedback, and decide whether to stay with the debrief or go back to debriefing. So that's what we got going on here. So once again, all my most important resources are accessible through the links in the description of this video. And I hope that you find it useful. And if you do find it useful, I'd appreciate you giving the video a nice thumbs up to help with that YouTube algorithm. And I would also appreciate any engagement in the comment section of this video. So regardless, I thank you for your attention, and I hope you stay classy until tomorrow.